Welcome to the Pulse Check podcast, Ben.
Thank you for having me,
Good
Salman.
old friends.
Yes, indeed.
Yeah, Ben Quinlan, Managing Partner, CEO of Quinlan Associates. So great to have you on board. As usual, I start with a bit of an icebreaker. So what is something special, unique that makes you, Ben?
In addition to my hairstyle, I would say a lot of people know me for my other hat, which is a stand-up comedian. So I've been doing stand-up comedy for about 10 years now. I started during this sabbatical that I had as a consultant actually at the time. And it was one of these things on the bucket list that I really wanted to do. And what started out as a hobby turned into a career. So it's an actual parallel career. Thankfully, it doesn't happen during a weekday or during working hours. It's more something where I, let my hair down metaphorically on the weekend, and a Friday, Saturday night, I go do some shows.
As you're running a consultancy, are there times when you are in a board meeting that you think of a joke coming up?
All the time. I often say consulting is exactly like comedy. We just tell the jokes on PowerPoints and charge a lot more. So, but in all honesty, I think humor is an amazing mechanism and tool to use in a boardroom. I've never met someone that's had a bad time laughing. It's really good at, building rapport with people, cutting through hurdles or personality differences. Laughter is very, very universal. And it's a good way to build trust and connectivity. I think we've all experienced the times where you can be around people who just make you burst out in tears laughing. There's a different kind of chemical connection that you have with those individuals. And hopefully it's one of those things I do in boardrooms without creeping out too many executives.
I would love to ask some of them what they thought in conversations. Let's dig into then the topics of today. Starting with, in Hong Kong, the topic of virtual banking. That has started a couple of years ago with the 8 virtual banks that received the license, with, of course, the attempt to push for new approaches, new ways of banking. I think you probably also read the book on Banking is Everywhere, but Never in a Bank, Banking 4.0, and reflect a bit on where do we stand after a couple of years of watching these virtual banks.
It's a tough story. I think when we came out the gates with our report on this, it was a bit of a flagship at the time, and we spent a lot of time and effort to unpack the Hong Kong VB story. I'm a big proponent of what they're trying to do. I'm a big proponent in a digital first approach. I'm a big proponent in trying to lower the marginal service costs to clients, passing on cost savings to them, creating better experiences, journeys. Really, that's what it's fundamentally about. But Hong Kong doesn't have an underbanked problem. It doesn't have an unbanked problem. So you're effectively competing against very embedded incumbents where banking relationships in this market are extremely sticky. And the virtual banks have struggled, in my view, to really make an impact. I think they've done very well in terms of customer acquisition, but really when you look beneath the surface of those 2 million plus aggregate customers that they've captured, a lot of these clients are dormant. The deposit stickiness is very weak. I think when the VBs launched, the average deposit was around 30,000 Hong Kong dollars. Now it's about 15,000, so it's halved.
Oh, wow.
Yep. And the reality is, how much can you make this limited pool of money go to work? These 8 VBs command 0.2% deposit market share. So it's a blip in the ocean in Hong Kong. So it's tough. And again, it's about how can you get the product and service proposition rolled out in a way that actually, can these ever be a primary bank account, right? And if not, as a secondary bank account, what purpose are they really serving? And does that purpose have enough impact to actually generate a profit for these institutions?
Yeah, you mentioned primary account, and I remember when I lived in Singapore, there were the top 3 banks. They were giving an additional 1% interest rate if you just put in your salary into their account. That's one way trying to really lure you over.
The payroll wall.
Exactly, the payroll account. In Hong Kong, of course, there's also the big 3, maybe together with Hang Seng, +1, 4 banks that dominate the market. And of course, with the virtual bank, while you're right, it's maybe not underbanked, but still, I feel there are some banking services that you don't get or not at the service you deserve.
Yes.
And maybe we can also dig into the topic of your other report on SME banking, because me as an entrepreneur, I find it quite challenging to open up the business account here, and it's a lot of paperwork. And by the way, even when I open up my personal account, the first fun joke you could crack about is she brought an iPad, that was 7-8 years ago, and I thought, okay, all online onboarding, but she actually took a picture of my passport with the iPad.
Oh, yeah, very advanced.
Hilarious, very advanced. But coming back to SME banking, that's for sure a bit of a, call it underserved?
Extremely. In every market across the world, even in Hong Kong, I think for the past 6-7 years, about 30 to 40% of the SMEs that actually applied for loans were either rejected or only partially approved. Now, that doesn't mean every single one of them should get a loan. There's, from a credit perspective, maybe a lot of them weren't suitable. But my experience when I set up Quinlan Associates with my own bank was they needed to run KYC on me as an individual again. And I said, but I bank with you as an individual, so you've done that. But the SME banking department couldn't trust the retail banking department, so therefore they ran it all over again. Thankfully, the process wasn't too painful for me, but for a lot of companies, onboarding can be 2-3+ months. I know people that have been stuck for a year trying to get their business account set up. And forget it if you're in anything to do with blockchain crypto space. That's an area that the banks are almost allergic to. And even the regulator has encouraged them to be more open to facilitating these kinds of businesses. But that general journey, why do you set up a bank account as an SME? Ultimately, you use it for payments, with your suppliers, your vendors, whatever it might be. And, the rates are very heavy. The charges on there are not that pleasant. This is why you've seen the Air Wallets and different providers service this gap in the market. And then on the lending front, the access to credit and the ability to make this a smooth process. Because if you read our recent report, it's hell for a lot of these firms to get any access to a lending facility. So this is why you've seen these new digital MBFI players pop up in the market. It's not easy because they don't have as low cost funding as many of these banks, but they have a more intuitive way to plug into ecosystems and data and look at alternative ways to credit score. And my future view on where this is all going to go is it's all about what we call algo-based lending, right? So using predefined algorithms to pre-approve loans. If you have access to two-way information about my P&L through an integration with my accounting software, or if you know what I'm receiving in customer revenues through the POS integration or whatever it might be through an e-commerce plugin, then you should be able to understand the profile and health of my business to set a lending limit against. So next time I log into my business bank account, it may say Quinlan Associates is approved for a $5 loan, hopefully a little bit larger than that. But that's the way I see things going. I shouldn't have to be consistently applying for credit on a basis which is going to set me back months to get that money through.
That's a very interesting topic, not only for SME, but even for personal loans. I remember talking to a fintech company in Indonesia where they also launched basically an app where you, in Indonesia, of course, a big part of the consumers, they just don't get a loan, depending where they live. And so what happens is that you download the app and then you just basically strip off all your clothes in the sense of giving full access to your social media and everything. And then it screens you fully to what type of people are you connected and so on. But it gives you then a chance to actually get a loan because they see that actually, okay, in a normal bank, you may not qualify, but here with then also maybe peer-to-peer lending even you can get to a loan.
Absolutely. I mean, it really exploded in the peer-to-peer BNPL space in these emerging markets where the companies would literally scrape the metadata on your phone. So sometimes you would have to give them permissioning to do it. And I remember even when we were speaking with their credit teams, we were working with these clients. It was such a black box. They wouldn't really lift the lid and open the kimono. But they would give us indications of what they looked at, like, do you have other gambling apps? Do you have other lending apps? screening your call records. Do you have Tinder? That was one where they said if you have Tinder, you're less trustworthy. So when they were telling me this, I was deleting my Tinder as in the middle of a conversation, right? So it's fascinating, but there's so much power in this metadata, in your digital footprint. It says a lot about you that an income statement in and of itself wouldn't be able to do, right? Or salary proof or whatever.
But that also scares off people. And
It does.
I see that, of course, in China, that they're actually way advanced when it comes also through WeChat Pay and then also banking through these multi-super apps and so on. And that's also something that I missed looking at Hong Kong. Every virtual bank came with a new app again. Mm-hmm. So you have then 8 apps. If you try all of them out, you have the apps with all the bank accounts. One of the biggest banks here, they themselves have 5 apps, as you said before. You onboard as a business client, you have a business app, you have a trading app, you have a retail app. I mean, it's just humongous and terrible, the experience.
Yes.
So maybe you can tell a bit of where you see this future can go with the incumbents, the traditional banks, fintech companies, how this partnership could play out to create a better experience.
Yeah, you're right. I think most of us have app fatigue. And when we look at our phones, we probably have 100 plus apps on our phones. We realistically use 5 or 6 consistently. And then there's the gaming button, which men tend to use on the toilet for extended breaks, or at least me. But we don't use a lot of these apps very regularly. And what you tend to find is that it's like almost when you go shopping, do people look up shopping deals on their banking app? No. All of this is about embedding the actual banking product or experience in as close as possible to what I would say the point of consumption, the point of decisioning for an end consumer. And even what I saw with insurance companies would launch their own apps, a flop. No one goes on an insurance company app. I mean, they served an initial purpose of really lodging claims. That's where people could start to do digital claims. But beyond that, you would never touch it. So the insurance companies, the smarter ones, started to realize, well, people go on their banking apps more. They're making more payments and, whatever it might be. So why don't we embed that within the banking app as opposed to trying to draw traffic to and unique eyeballs to this standalone proposition in and of itself. So that's the whole embedded play. And it's easier said than done, but I think the open banking regulations, advancements in API connectivity, albeit I would say that it's not as mature as I would have hoped with some of the banking providers here, that really opens up unique possibilities for these experiences to be brought closer to home for us as consumers.
Yeah, exactly. Because for me, virtual banking, invisible banking is that I actually don't even realize that I'm banking. And I see first attempts also in the US with X, for example, giving you access to a trading account and so on. And you're right. It's 4 or 5 apps that probably most of, especially the young generations are using. And it might be the Facebook, that's actually, I'm made aware that it's for the old people. Yeah, exactly, the old people app. But maybe X or Instagram and TikTok, that you are in a good experience and you realize, okay, there's something I've seen, I want to buy and maybe buy now, pay later, or I want to invest in something I admire or whatever it is. So how long do you think, or how much do we need to still invest into virtual banking to really see that reality that you bank through a different app rather than these banking apps?
It's going to take some time. So, I mean, it's kind of bifurcated through you doing it through other apps or people trying to develop their own super app proposition. But again, the super app proposition is not something, in my view, that it's so much easier said in theory than done in practice. So you're right. I think this whole concept of invisible banking, it will progress, but it will take more time than I think most people have in mind. The one example that comes to mind here is, did you see Apple kind of discontinued their buy now, pay later?
That was interesting.
Yeah, so the original proposition, would Apple be footing that as a proposition themselves? And now that's been passed along to other credit card providers or lenders. So they don't wear anything on their books. They're really just the channel into the end customer. So that was the whole idea of do the technology providers become financial institutions themselves? Do they start to move down the finance game? And it was very interesting to see Apple, turn its business model away from doing that and really, what I would say, focus on core, but let the financial institutions do what they do best, and obviously capitalize on their ability to plug in with such a vast customer network. So
yeah, that's a very interesting example, especially also I think it was with Goldman Sachs that they had the partnership, and they actually offered quite strong interest rates, if I'm not mistaken. So it was also interesting to see how can this work out for the banks as becoming more kind of a platform provider. And that's what typically banks don't like to hear. They don't want to just be seen as a platform. They want to, of course, also own the customer to some extent.
Yeah.
And brings me also to that point, how much do banks want to evolve into becoming more of an ecosystem partner platform and not owning the clients? Because that's why the virtual banks, of course, created their own app. They want to make sure they sign up with us, and now they start to build in everything into their app rather than play that ecosystem. So what could make it more interesting for banks to become a bit more pure platform?
It's hard. I mean, some are gamifying the experience, right? And I don't know. I mean, gamification, I'm a bit less sold on that. How many games do you want to embed or an experience within the banking app itself? Usually when you go to a banking app, you're there for a specific purpose. And because you're there for a specific purpose, you're there for a very specific amount of time. It's very rare that I go on my banking app to do a transfer and say, let's just browse today and find out what gamification experience there is. Everyone is in the fight to win eyeballs and screen time. Banks need to realize that, in all honesty, they're losing that fight. And it's impossible with this next generation to get as much attention from them natively via a banking app. That's my honest view. So you have to think very carefully around what is the next generation doing? Where are they spending their time? And how does our proposition just seamlessly integrate into the way that they live their lives? Now, that may not be as relevant or may have less relevance with things like a very strong natured customer relationship, let's say in a private banking context. But even then, people are looking for hybrid style solutions. They want the ability to have the high touch attention of an RM, but on vanilla trades, no one is calling up their relationship manager to execute a trade of Apple stock for 30 bips. That's not happening. They go into Futu and they're doing it for free. So a lot of things that are what I would say highly commoditized, banks, this is the way I say it. Banking, in my view, there's almost no differentiation in the product. Insurance, there is, but banking, there's not. Savings accounts, savings cards, a card. You can toggle with some rates, but the reality is it's all about the experience, the features, the functions, the usability, the acceptance points. Like, you've got to fight on different parameters for where you are going to win. And sometimes I feel that banks focus too much on the product itself, which doesn't have as much longevity. So for example, with the deposit race right now, the VBs may be going out offering aggressive rates, but how long can they sustain that? And once you realize that you can't differentiate that product pricing proposition for too long, you default back to where your competitive moat is, and then you realize most of those deposits go back out the door, which we've seen happen. So the evidence is there. Yeah.
That's very interesting, and that brings me maybe to the last question, as we are already running towards time. You, as a consultant, trusted advisor with Quinlan Associates, how do you then advise those banks? What are maybe also typical concerns they have? I'm sure they watch out more towards an Apple, what they are doing, than some of the smaller fintech companies, but how do you work with those clients, and where do you help them?
It depends on the maturity. Sometimes it's just about the education stage, really making boards, management teams, C-suites aware of where the industry is going to go. A lot of people will hear anecdotally. They'll understand. They've had 10 consultants come in and hypothesize about the future of the world. We go and we give them the real data and the real evidence. We get really into the weeds. And I think when you start to show management hard data and facts, they're all motivated by a P&L compass. So if you can move that P&L compass in the right way, they're going to act. And part of it is you see a huge amount of resistance to change when it comes to digital with many of the incumbents, particularly in Hong Kong. It's a very peculiar market. I still find it extremely analog for a tier 1 financial city. And there is a huge reluctance or resistance to change or fundamentally disrupt business practices, to move to models where I have to invest in digital, I have to, like, look, we've got 115,000 insurance agents in Hong Kong. We've got how many wealth managers and RMs? We've got how many retail branches? This is like the most intermediated market in the whole world. And you tend to find that if you're able to do that and sustain your business model, a lot of people will want to maintain that moat for as long as possible. But I've seen it time and time again where you see almost like the sunset business. You know what's going to happen. But for every CEO that you speak to, are they going to be there for 10 years? Most likely not. So to engage on a big disruptive change program, which may take 3 to 5 years to actually start to materialize, they won't be there to see it. And people naturally are motivated by incentives. So how do you change that mindset? There's push factors and there's pull factors. You know, the pull factors are, is this interesting you? Is this drawing you? And the push factor is really when it comes down to what I would call the regulator saying, no, we need to move in this direction for the benefit of this city's future. This is the way we have to go. A regulatory handle can be very strong in changing what people do. Once it's mandated, you tend to find people just do it magically.
Yeah, exactly. That could be a topic on its own, also where the regulator should more turn towards launching the 8 virtual banks was a good first step, but there's still a lot to go. And sums it up also nicely. I think we see a certain direction, we see a lot of development, certain innovation, but there's still a long way to go.
Yes. For
banking and insurance, and especially in Hong Kong.
Yes.
While there is innovation, there's also a lot of tradition.
A lot.
So thank you so much. Is there any last words, anything you want to share?
No, I mean, I think the mission of what Simpulse is doing, the mission of what Quinlan Associates is doing, it's very aligned in terms of the end objective of what we want to achieve for the institutions that we work with in financial services. What I would urge, I guess, the Hong Kong FS industry to do is not be too complacent, right? Hong Kong has served a very unique role as an international financial center for a long time, and it has a very high touch model, but it doesn't mean to ignore the mass populace. Sometimes people say Hong Kong is such a small market, it's only got 7.5 million people. And then I say, yeah, but the average retail deposit here is about 60,000 US. So just remember the depth of liquidity, of assets, of everything that exists here. And I would say that the longer these institutions don't look to service them in the most cutting edge way, the more you'll see them start to fade into irrelevance. Now, whether that's in a year from now, 5 years, 10 years, it's debatable, but it's going to happen. So, focus on the change, embrace the change, see it as an opportunity rather than a fundamental disruption or challenge. With every change comes a huge amount of potential. It's just those that are able to identify and grab it that will come out the other side the strongest.
Thank you so much. And I love to work with you as the strategist and the engineer.
Indeed.
Or the comedian and the runner. So we have a lot of common grounds. Absolutely. Also to shape the industry. So Pulse Check with Ben Quinlan. Thank you so much. You can hear us on YouTube and other social media. And love to talk to you again in a couple of weeks on the next topic.
Pleasure. Thanks for having me, Selim.
Cheers.
Cheers.